Hey everyone, I wanted to do this video on what a short squeeze is and then also give my opinion on whether or not I think AMC stock is going to continue to rise. I got a pretty interesting finding that I saw on that. So when you compare it to GME chart, which is what we're going to do, uh, it's a lot better, it's a lot healthier. So, I'll show that after I explain the trade here. So yeah, I wanted to explain what a short squeeze is because I had a couple questions from some friends and from some other people online as to what a short squeeze is. So there's a bunch of different ways you can make money in the stock market, but the main two, you can make money going up, you can make money going down. So if you are making money going up, you're going long. If you're making money going down, you're going short. So if the stock price goes down and you're going long, you're losing money as it goes down. If the stock price goes up and you're short, you're losing money as it goes up. Now, the main difference between the two is, let's say you short 100 shares at $1. Now, the stock goes to $10. You're down $900. All right. There's no ceiling. It can keep on going and going and going and going. You can lose an unlimited amount of money. Your broker will stop you out depending on how much you have in your account, but you can get completely wiped out. On the other hand, if you're going long and you are long 100 shares at $1, stock goes to $1, most you can lose is $100. So that's what happened with GME a little while back. There were so many hedge funds, people short that stock, that all of the shares were sold short. And you can find the short interest of a stock on finviz.com, finviz.com. So all the shares were sold short, and there were even more than all the shares sold short. So it's like, how does that happen? Well, hedge funds are allowed to create synthetic shares, and they did. They created a shit ton of them. And, when Wall Street Bets and, the Reddit people found out about that, and the general public, they squeezed them, short squeeze. So short squeeze, they knew that these guys had all this money betting that stock will go down. So they all ganged up and pushed that price up. And, it's been happening for a while. I've been trading about 7 years, and you always look for short squeezes, and that was a beautiful one, and that was nice to see. So we're seeing kind of the similar stuff with AMC right now. People are wondering, is it over? Because on Friday you had that big red day, and no, I don't think it is, and I'll explain that towards the end of the video. So anyway, that's a short squeeze. Let's talk about some sympathy plays. So this trade right here, Blackberry, is a sympathy play off of AMC. In other words, in the stock market, things move together. So the airlines move together. If United is moving, JetBlue's moving, Delta's moving. If Tesla's moving, the other electric companies are moving. Okay, the theme over the past couple of weeks has been the high short interest stocks. They're the ones that have been running. So they all run together. So if you know what stocks have a lot of short interest, you can buy into them and make money off of them as well. And why would you do that? Okay, so GME costs $250 a share. Blackberry costs $9.50 a share. So, let's say you got someone with a small account and they have $500. Rather than buy 2 shares of GME, they can buy a bunch of Blackberry. So, little things like that. And sometimes you'll get bigger movements in those stocks. I did in Fossil, and if you're buying options, it's a whole nother story. You can really benefit off of moves like that, because sometimes like Blackberry or Fossil will be a couple days behind GME or AMC, and if you buy those options, the calls out of the money, a couple days before, in anticipation, knowing what's going to happen with GME or AMC, you can make a pretty nice amount of money. Anyway, let's get right into this trade. So this is Blackberry. Now, why would you trade Blackberry? Crap company, right? Didn't even think it was around anymore, probably a lot of people, but yeah, it is. And it's heavily shorted. So it's moving them right there with AMC, GME. Another one that moves with GME is KOSS, K-O-S-S, in case you guys want to know. And then another good stock to trade with high short interest, Fossil, F-O-S-L. They always seem to move together. So anyway, when Blackberry opened up, this is Thursday, this is Friday. So this is let me see, yeah, that's Thursday. This is Friday. So we opened up on Thursday, dipped all the way down. I like the fact that it dipped down because if you notice here, let's just do 5 days, 5 minutes. If you notice here, look, here's Monday, here's Tuesday, Wednesday, Thursday, Friday. Look at Monday and Tuesday, hardly any volume. Now the volume is down here, okay, on the bottom, the little bars. So on Tuesday, a little bit towards the end. So that's when, the AMC and whatever started spiking up a little bit. So this Blackberry is going to get some sympathy. So we got some traders piling in here. Then the next day, look at the volume increasing. Now people are starting to catch on. So more people pile in. Stock rises. So look at that. From 850, if you would have got in over here with these early people, you got an 850 average. I didn't though. So I got in on Thursday. And I got in on Thursday that, the stock opened up at about $9.75, but I'm not going to buy at $9.75. I waited until we dropped down into support. And where's support? All right, so is where I bought right here. Look over here. How many times did we bounce off of that level, right? So that's a strong area to buy. So I'll wait till it, drops down to there. Now, 25 cents may not seem like a lot of money, but if you have 1,000 shares, it's $250. And that's $250 you could have if you just wait and let that stock come to you. So that's what I did, and took 750 shares. Now, I held it all day into the close because I got those shares at $9.50, and stock closed at about $10. So no volume, a little bit of volume, more volume on this day, increased into the close. The price increased into the close. So more than likely, the next day, easy money, you can go to sleep and wake up to a profit and sell it. And sometimes you can sell in the pre-market. You don't even have to wait till the market opens. You can sell at 7 o'clock, 8 o'clock, 4 a.m., depending on who your broker is. So I decided to wait. And the reason why I decided to wait is because of this. So, anytime you get into a trade, you want to look at the daily chart. So here's the daily. And we're going to separate this. Now, these purple lines are all resistance and support lines. So I have all these mapped out. And when you have this huge volume here, look at that, like you never have before, you're going to get bigger moves. So I'm figuring, all right, where are we going to go to? How high? I'm going to pick right there, 12. So that's where I picked, because we weren't going to go past that. Because past that was kind of getting a little bit out of hand. And then also, AMC started to die down too around that time. So that's why I sold and got out of this position. Let's go back to 5 day, 5 minute. There we go. So yeah, buy low, sell high. Here's our resistance. Let's get out. Look, party's over. We're going back down. There's no sense in holding and, worrying, am I going to get a bounce? Is it going to go higher? Hope is not a strategy. So sell, take your money, get out. And I had initially wanted to sell this at $11.97, most of the shares, and then I had wanted to sell the rest at like $12.04 or something like that. But I forgot to put the orders in, and I was in like a bunch of other trades at the time in other accounts, so I didn't. Oh, that's okay. I still caught most of it. So yeah, quick overnight trade, and pretty simple. Sold, got out, done. Sympathy play off of AMC. All right, so let's talk about AMC. So a lot of people have been asking me, okay, is AMC still good? What do you think about it? This, that, and the other. All right, so we're always going to pull up the daily chart, right? So here's the daily chart. Now, this is Monday. This is Tuesday, Wednesday, Thursday, Friday. All right, so on Thursday, we ripped from like $19 and closed at $26. So significant, about what, $7 move. Now just imagine you had 1,000 shares at $20 and you closed at 26. So you're up $6,000, right? Then the next day happens and we open up here at 32. So now you're up, where are we at? 20 to 30, 32. So you're up $12,000. Nice. But when it starts dropping like this, and you have all these people in here from the day before with a low average, and we get this drop, and we can look at this even further. We'll do a 5-day, 5-minute. When you get these drop, this is Friday. These are 5-minute candles, so 5, 10 minutes. So 10 minutes in the beginning, look kind of strong. And then you get this huge drop, right? From 35 to 30. So you got your 1,000 shares. Now instead of being up, whatever it was, I think 12,000, you're down 5,000 quick within 15 minutes of the market opening. So you get a little bounce, but all the way back down. So you're down thousands of dollars. So what do you do as these red candles are happening, or the white ones is a smart move? Sell. So you sell, you get out of that position, you're done. You wait till it goes back down into support, and then you can buy in. So all these people who see that they're losing their profit and their profit is declining, they sell real quick and get out of the trade, take their money. So that's what happened here, and it's not a bad thing. It's actually a good thing that this happened. This is what we call a gap fill. What's a gap fill? Gap fill is when the stock closes at a price and then opens at an even higher price. Now, if this stock were to keep on going up, then we would have a white candle going up this way, and all this would just be black. And all gaps usually get filled, and it doesn't take that long, especially in the short squeeze stocks. Now I want to show you something with GME and why this chart looks a lot better than GME. So look at when GME squeezed. Boom, huge gap up from 148 to like 354. Now that makes people nervous because you went from basically like 150, you more than doubled. So you opened up higher than 100%, which is why you got this crazy candle. And then the next day, even worse, 483. But look, you filled a few $100 gap with this here. And that's why GME didn't last long, because it wasn't healthy. Just boom, gap up, and then gap down, and then gap up, and then gap down, and then a big gap down. So if you were long on this gap down, you're losing a shit ton of money. So it's good that AMC did that and pulled back how it did. I think that needed to happen in order for a proper short squeeze to continue, and I think that it will. continue. There's so many shares out there sold short. So many, institutions short this stock that, if the general public, they're just going to keep on squeezing them. You saw what we did with GME. So yeah, that's my thoughts on these two. Just wanted to show what a sympathy play was and what a short squeeze is, and how you can profit from cheaper stocks, that it is possible, that run with it. And I think AMC is good. We filled the gap. We're back down into support right here, and a nice area is when we're coming up on this. Look at this. We got you see how far these lines are away from each other? This support and resistance. So that's where I'll be looking to get into. It's like 28.85 to 32.62. So if I see that poke through that 28.85 in the daytime, I'm looking to get long, because I want to ride this up, these couple of dollar movements. Take a couple thousand shares and ride it for a couple dollars, or maybe even more. So we'll see. I think we're good to go on the way back up, and we just need to keep on pushing. But yeah, so that's pretty much it. I just wanted to put my 2 cents in on that. I think we get continuation. So if you guys have any questions, just let me know. Drop a question in the comment box, and I'll be more than happy to help you out. Other than that, have a great weekend. Thank you.